Good morning, this is Connor from 0DTE Traders, here to present our market minute for December 23rd, 2024. In this video, we will conduct a quick intraday analysis, discuss what to expect post-op X, and end with a performance check. Let's dive in. It is 10 o'clock and the SPX is trading flat at 59.31. At this juncture, it is much more neutral than imbalanced. ADD negative 900, volume difference negative 1.7 to 1. Defensives red, traditional cyclicals red. Growth mixed, mega caps up, which is most certainly a positive here. Megs up 0.6%. So this very well could limit downside if it persists. VIX is holding its bid here up 2.6%, just below the 19 handle. Vol is an exacerbating factor and is really key for the upside here. So if you're a bull, you're looking for that trend change, you want to see a vol down environment. Now, the first indication of a trend change from down to up is going to be a higher low, followed by a break of structure, and then a higher high, which is the continuation indication. Right now, it's kind of hard to tell if we're going to see that, but I would say levels to watch on the upside is going to be 59.70. That is our flip and transition, followed by 6,000, which is the big balanced strike. And then above that, 6,055, which is the JP Morgan short call strike and the call wall. As far as the downside goes, we have some micro support here at 59.20. This did act as the upper bound on Thursday of last week. A break below opens the door to the 5,900 put wall, 58.75, and then last week's low around 58.30. This week is expected to be uneventful with the holidays kicking off. There are no major economic releases or earnings. Wednesday, the market will be closed for Christmas, and Tuesday will be a shortened session closing at 1 p.m. The big question here is, are we going to get the Santa rally this year? Now, the Santa rally is a phenomenon where equities typically gain during the last 5 trading days of December and the first 2 trading days of January, helping to mark up performance into year end. Now, we did have the FOMC last week, which sent a reality check to markets, indicating higher inflation projections and a slower pace of interest rate cuts in 2025 and beyond. So this hawkish stance led to some weak performance last week. And really the key question here going forward is the market going to sustain its uptrend or face further short-term weakness? Now, what we're looking for here is positioning post-option expiration, post-FOMC, to see what participants are expecting going forward. What is the sentiment? Are option sellers enticed by the higher implied volatility? Or are participants going to be demanding puts, signaling a concern about broad market weakness? So 2 things we're looking at here is going to be the open interest change data day to day. Now, we clearly see a huge reduction in open interest across all strikes here due to the option expiration last Friday. But going forward, we want to see where is that open interest building on the call side, on the put side, and then to what extent. Is it far out of the money? Is it closer to the money? And this will give us an indication in terms of sentiment and what participants expect going forward in terms of volatility. In terms of our intraday queue, we are looking at the VIX. Right, so if VIX is going down, that means traders are selling volatility. That's a bullish indication. If VIX is moving up, it is indicating that participants are demanding puts, which is a bearish indication. Popping over to our gamma chart, we can see that there's some improvement here from Thursday, Friday of last week, although this is largely a function of the option expiration and the removal of the open interest and gamma tied to those options. So though we're not in a risk-off environment anymore, bears are still technically in control, negative 480 million notional. That transition from negative to positive is our flip level. This shows at 59.70, this is the transition. Most strikes below negative, that is destabilizing for the market price. All strikes above positive, that is supportive for the market price. 6,000 resistance, followed by 6,055. Recall, this is the JP Morgan short call strike. So if we trade in relative close proximity going into that option expiration date on the 31st, this is going to grow in significance, could act as a bit of a magnet, sticky. There's pinning potential there into year end. So this is likely to influence market dynamics. Below that flip, bears are technically in control. 5,900 is our put wall. So there is bounce potential if this is tested. A break is a bearish indication, with support at 58.75 followed by 58.50. Now, I didn't record a market minute last Friday, so let's conduct a quick performance check from last week. I finished green, up $3,370, 8 trades, 7 winners, 1 loser. I only traded long volatility, so single options, debit verticals. Quite consistent here, 100%, 170% ROI, which is really not that challenging to achieve with that level of volatility. You essentially just hop on the momentum and you find yourself in profit real quick. Now, I do avoid in negative gamma short volatility strategies, particularly out of the money credits, as those trends tend to persist for far longer than you anticipate, and picking those turning points can be quite challenging. So I find just long volatility is the better approach. If you're a little bit concerned with the higher priced options, entering a debit vertical can really reduce the cost to participate. Stay tuned for my end of year review where I'll break down my performance in detail, all 476 trades, categorizing these into strategies, setups, and really see what I did right, what I did wrong, but what I could do better in 2025. So again, stay tuned for that. This is my last market minute of the year. So I just want to wish everyone a Merry Christmas, Happy Holidays, and a Happy New Year. If you'd like to learn 3 option strategies that our traders use to generate consistent profits with 0DTE options, along with a repeatable process on how to trade these strategies effectively, join the team at 0DTEtraders.com.